CFTC, combined with a few other regulatory agencies. I think you'd see that Sunday night, but I would have to take the other, that's because that's being built into it today if I'm right. And I don't know that I'm right. I'm just kind of looking at the action.
Yeah, and this is the same deal on a Friday. Once it starts going, if you get in the way, good luck.
And the reason I say that is we've had 2 central banks raise rates this week, right?
Yeah.
We've had some other big, things that could cause a little discomfort for investors, but here we are, just rallying and rallying and rallying. So again, the Fed has taken a lot of heat, and I happen to agree with that, by the way, and I'll go back and we can return to Wayland for a really ill-advised rate increase this week. And yet, here we are. Yes, we're still a little bit lower on the week, but this is quite a rally today.
Oh, shit.
Into numbers, if you really look at it on the face of it, vindicates the Fed. I don't think so, but you can certainly, that's the CNBC view.
It's crazy.
And my other line, in my shorter term line in the sand,
It's right at the
is
200.
the February 2nd closing high.
Oh.
Sorry, Jed. It could be the wrong screen. I can't see anything.
No, there it is. It's right at the 200 day. It's coming right.
Oh, I
up
see. Yep. Okay, cool. Yeah.
Hold on.
So, Ira, that's the Nikkei
Euro.
Euro.
Yeah.
Yeah. Wait, hold on. I'll put
Yeah.
that.
Oh, that's right back to the breakdown level in March 23rd.
Yep.
So, what
That's
happened?
what I saw.
09.
Yeah. Okay. Cool. Glad we're on the same page.
Yeah, that was the European debt expiration right there.
Mm-hmm.
Angelo, what took place on February? Something took place on February 2nd.
No, that was just the bear market rally high for the year.
Okay. Yeah, but I
In
thought
which?
there was some news out there, and it went up right to that. Yeah, I remember we were talking about it live at 4208.
I don't remember. I just remember February 2nd as being my new line in the sand.
Yeah, and that absolutely fit with the Jackson Hole.
They can't hear me, but you guys can right now. But do you guys see how we're looking at a massive amount of shit all at once? We're looking at the names. We're looking
So
at
I'm looking at
fucking weird shit.
what chart did you?
We're looking at all the way back to 1970s and.
And it's right back
It is
to the,
overwhelming, baby.
March,
But this is how you
roll in the European
find the
debt.
right shit.
Okay.
And it's right at the 200 day.
So Ira, the S&P cash, the SPX, closed at 41.79 on February 2nd.
It depends on a capital
that's
flow,
what I'm
Cosmo.
watching.
It's not just as simple.
Yeah, that's the level you're looking at. I can see it.
So 4208 and a half.
Sometimes I like closing numbers because that's
I love cozy numbers.
well, yeah, because that's the number that investors are willing to go home at. That's the price that they're willing to go home at.
Yes, Brian, I agree with that. I believe me. I have very high respect for Hugh Henry's intelligence. Just the way I feel about Mark Armstrong is very, very bright.
Oh my God! But it's such a conspiracy.
Yeah,
he and Rickards. I mean, they should. It's the CIA deep state bullshit every 2 seconds.
And listen, I understand he's got a lot to be angry about.
Hey, Jed.
What's up?
You know how like we were talking about that Dow and 30-year yesterday?
Yeah.
I don't know why. I just went to Hamster Vision today and just didn't didn't take it to the long side. It was stupid, but I don't know.
I had a hard time. I get to the end of the week, and
We're burnt. Is that what you're saying?
my mind's just mush.
Okay.
So, there are a lot of
This has
things.
been
I
a
miss.
crazy week. I mean,
Well, part of it, too,
every day has been something.
Well, we talked about it earlier this morning, Angela. Was that what was odd was that every time, like Jeff and I thought we were going to get a move in the S&Ps, whether it was up or down, it didn't happen until the next time frame. It didn't happen until the next session, whether it was the U.S. or Asia came in or Europe came in. It happened in the next session. Whereas we've been getting them during our session. Like yesterday, everybody was trying to be long, in the 60s and low 70s. Well, it never rewarded you until last night.
Mm-hmm.
Yep.
Hey, Angelo, to quote Robert's mentor, Vladimir Lenin, some weeks are like decades, and some decades are like weeks.
Yeah.
Choose it.
Ira, can you answer something really quick if you're free?
Maybe.
How the hell can you read the markets at your age? Like, what kind of drugs or medication do you take? Like, you're just sharp all the time. I don't understand this shit.
Just a
Good
cup
living.
of coffee. Just a cup of coffee, Anthony.
Just the coffee with
That's
with what else in it?
That's it.
Okay.
That's not the answer I would have given, but that's okay.
you seen it in the pits, huh, Judd?
Thank you.
That's not it. I was going to make it a sexual.
Thank you, Anthony. I appreciate the compliment. I'm telling you, you know what? I just try, I try to keep myself active, and then I try to keep my mind active first, but I try to stay physically active. As I say, I want to be in good enough shape to be able to really run with my grandkids, and so far I can do it. So I'm very
Good
lucky.
stuff.
That's a good year.
It's the old adage, Anthony, a body in motion stays in motion.
Well, it's also another thing, Anthony, is that he doesn't sit in front of the screen all day and get tired out.
Wait, he doesn't just click the
He
mouse?
weigh a lot more than any of us do to clear his head to think about it.
And every time I walk away, I do that much better. So I go take a walk. I'm telling you, I have a methodology where I'm trying between running and walking, trying to do at least 15 to 17,000 steps a day.
Wait, 15 to 17,000?
A day.
Most Americans struggle with 5,000.
You know what? I try to get it, which is equivalent for me about anywhere between 8 to 9 miles on a daily basis.
Wow,
of
that's good stuff.
movement.
Yep.
So, Anthony, when I was in the pit, I was an active sailor.
Mm-hmm.
So for relaxation, sailing is just like looking at the boards to trade. There's no difference.
Hence white wave.
But, when you get out there, it's a total meditation because you're not looking at this. You're looking at a different set of inputs. And, it's just a different mental game. But at the same time, it's physical and it's mentally relaxing, even though you're really concentrated.
Right.
Hey,
'Cause you're
Ira,
not
what
looking
did
at
the
this
dollar
shit.
do? Ira, what did the dollar do back in 2011 during the debt ceiling debate?
Oh, dollar got hammered.
Yeah.
I'm pretty sure that's right. Let's go look. I'm going to put up the euro because I can't look at this.
Here it is, right there. 12. Here, January.
What was the date of that? So we
Jeff, can you maybe do at most a quarterly, maybe a weekly or a monthly, and just
We'll go back.
What,
spread this-
Angela, what was the exact time period of that debt ceiling discussion?
Yeah, here-
Same time as now.
this.
Okay, so here's the April
Because
high.
the cycle's the same.
Yeah, and was it 2011?
Yes, almost positive.
Okay, so, I mean, you had a lot going on, but we had the euro all the way up to 142.
Well, January,
The
below the euro was 128.74, and it went
Yeah.
to 150.
Right, and we were all over that number, if I remember right. It was really a hot.
And what quarter is that, Judd, that you have your arrow
That's the
on?
first quarter there.
Yeah, okay.
That's the
And then,
second
and
So
then
quarter.
that
that's
was
the second
also-
quarter.
And
And
then the
that
third
matches up
quarter.
to right now.
Yeah,
Okay, but I'm gonna ask you a bigger question. What month did the rating, what was it, Fitch, who downgraded US debt, or S&P?
Yeah, one of them.
So you need that exact date? And then,
Somebody, hey, Anthony, are you good with Chat GPT? Type it in there and see if it gives us the answer.
Angela, I'm in Hong Kong, right? It's not allowed here.
Oh, right.
Yeah, it's banned. They don't want the Communist Party having that kind of shit. Come on.
All right, somebody else do it.
oh, wait, hold up. I'm gonna send up a balloon and see if I can find the answer. Well, oh, let's see. I'll get the answer. Now I gotta go to work. Yes.
Maybe type it into Google. My
But
hands
it-
are dirty.
But Anthony, thank you for that nice compliment. I appreciate it.
Oh no, it was a real question, like how?
No, I appreciate it.
No, I mean,
It's a lot of work, but it's like my wife says, don't ever stop because I won't be able to live with you.
Anthony, do you have any idea how old I am?
we've talked on cam once, I believe. But I can get good, I guess. But what I wanted to say to Ira was, the other day he said it right? It's like the reason what makes this room so great is that analysis of the group, people putting in their work
Okay,
into
yeah.
and it was amazing, and it's absolutely true. You know, I think what you guys contribute every single day.
You know,
If it doesn't make me money, Ira, it at least saves me money. I'll put it that way.
well, you know what? Anthony, that's one of the things that I preach is it's not always how much you make. A lot
Yeah,
of times,
it's not doing something stupid, so you have to spend a month trying to
Yeah.
get it back.
You know, years ago, Richard Russell said to me, in a bear market, everybody loses. You know, one way or another. If you own a business, you know, your business probably suffers. If you're in the market, you probably lose some money, maybe not as much as the next guy. And I was always like, well, I certainly get that. But if you can trade your way through it, as most of us here can, then it's not so bad.
Yep.
okay, I've done a little work here. So here we go. August 5th, 2011, S&P lowered the credit rating of long-term U.S. government debt.
All right, hold on, let me see. if
August
I can go
5th.
back there.
Because in 2011, they came to an agreement,
Right.
I think, in the 11th hour.
Yeah, and so this was, the S&P, of course, did it afterwards, but
Yes.
after the bargain was struck, but they did lower it. So August 5th, I definitely have that date. So let's go take a good look. Because it's such a good question.
All right, here's August right here.
So
And
the
that
euro
a
was already starting to exhale against the dollar.
Right.
Yeah, but
'Cause
it was you know, that month, it was only 5 figures.
Yeah, and then look what happens after. That was
The next month, it just,
and don't forget, Trichet.
Yeah, Ira, what was the year? What was the year that we had the European debt crisis? Was that 11 or 15?
2012. It started July of
That was 12.
yeah,
Okay.
and look at the low in the euro, July.
July 25th, 2012. It was 5 in the morning in Chicago, and I was doing a live hit with Steve Leisman. And I was trying to show him through the what was going on in the European yield curves, that there was a real problem. And then all of a sudden, in the middle of the interview, Draghi announces whatever. That's true. That was by, and I'd have to go back and find it, but I actually, Leisman and I, because he used to have me on, you know, Kernan, and yeah, you know, but you know, we got a little bit argument. I said, you're not looking at the curves. The curves are telling you the huge amount of stress going on in the European debt market. And it was already starting to show itself, because the Greeks were in trouble.
Oh, geez, you expected Steve Leisman to understand what the hell you were talking
Oh,
about?
no, he understood it. But, you know, but that's not the narrative he wanted.
No.
They're all
You know,
trying to
whatever
push
it
some
takes.
bullshit.
Whatever it takes, that was Draghi code for, we just bought an unlimited supply of ink.
Well, and it was a double phrase. It said, whatever it takes and no taboos, meaning they would do whatever rules you ever thought about central bank financing, forget it.
That's the thing about the rules that they make. They always bend them or change them.
Yeah, it's
You know, why make them?
the exciting game of
Well,
rules. And you're seeing it now with the bailout of the banks.
that's right.
And that's why somebody's got to read that piece Alex wrote with Poser. I'm missing something. Maybe somebody can enlighten me. But Anthony, going back to your comments, when I worked with Owen Brown in New York, and our biggest investor, because Owen was good friends with him, was Alan Howard. So Brevin Howard. So on Friday mornings, they used to do an hour where we could listen in to their conference amongst their traders and portfolio managers. Owen could talk. I was not allowed to speak. That was the deal.
Wait. They didn't even allow you to speak?
They didn't allow me to speak. No, you know what? It was Owen's, my friend Owen's deal. He was nice enough to provide me with the opportunity. So, you know, I just adhered and obeyed, you know, that was all. But I got to listen to the give and take that took place, which was fascinating and really awakened me to why, if you're a trading group, you need to do this at least an hour a day. But before I went to work with Owen, I had actually interviewed with Soros, because I knew I was moving to New York, because my wife and I just wanted to get out of Chicago, so I was looking for things to do. So I interviewed with Soros, and Eddie Zwider, who ran the show, and he asked me point blank, "Can you trade $100 million if I sit you in a seat?" He says, because you know I had a long interview about it. I said no. I said maybe I could trade notionally 25, maybe 50 million, but if you're asking, he says, you know, I just don't need another small trader. I said, I understand. But and he told me what they do every day. They had like a 45-minute to an hour sit down amongst the people so they could have the interchange of ideas, because maybe somebody's sitting there trading something or wants to know, what am I missing here? Why do I think this is such a good idea? And they would banter it about. And I think that's the most effective way.
Mm-hmm.
And I used to Owen, I say, Owen, we got to sit down 40 minutes every day, 50 minutes. It works. Because why are you thinking that? What do you, and if you, when you work through these things, actually you trade bigger because you get more confidence that, hey, yeah, maybe I am seeing this right. Or do me a favor, poke a hole in this. I think Angelo and I have gone through this where he'll poke a hole in what my thinking was, or I will, and I think it makes for better trades.
Oh, much better trades.
Oh, absolutely, Ira. I'm just a small fish, but I always sleep on it. Whenever I trade immediately during the day, I fudge it up. If I sleep on it, it's always better. As just about the wheat trade or anything else, it's best to sleep on it.
You know what?
You
And
got
Judd
a
was
point.
talking about me taking this thing about going for walks and getting out of here. Even when I used to just go,
Oh, that's another thing. Yeah.
it makes me think about it, and it makes me talk to myself and go, you know, what am I doing here? It's like on a positive number today, I inherently and instinctively want to get short the S&Ps, but I said, no, you can't. There's too much discussion about curbing shorts. I said, let this play out. And that was just me discussing with myself, you know, so I went back and forth. Here, Anthony, I already have like 10,000 steps today
Already? Wait,
already. And
you
it's
know,
only 12 o'clock here in Arizona. So I'll get up to 15 or 16,000 for
That's
sure.
4 miles already. You will clock in quite a bit.
And if I go play pickleball, if they need me, yeah, because I do a lot of moving around. I hate playing doubles.
Ira, you and Judd were talking about how the currencies are a difficult trade, right?
Let me, before we go to the next part of the question, they're difficult because there are so many variables, and the variables are always in flux.
The crosses and
Yeah, there's so many variables.
You got your fundamentals, you got the crosses, the capital flow. There's all sorts of interest rate differentials. Figure out what's moving it.
Look at the strength in the Canada today.
It's all oil.
I didn't even look at the Canada.
Yeah,
they had
it's
good
oil, and they had
numbers
a better
too,
and they had a better unemployment number again.
Yeah.
But on the other hand, the interest rate differentials, I'm looking at it right now. So the 10-year rate in Canada, the Canadian curve is inverted by 80 basis points. It's the most inverted of all. But the 10-year is only 2.91, and the Canadian bank has been on pause. Right? So
okay, I didn't see that.
Okay, so Judd says oil, and I'm not disagreeing with him. But let's look at this and let's do the overlay. So the Canadian has made, it'll be interesting if it could take out April's high. I'm looking at the futures, Judd.
Yeah, I just flipped up a cat on here.
So I'm looking at
because I wanted to get a cash view as well. Okay. Right into the cloud on the monthly. It's rallied too far.
But I just did the overlay with the oil. So when we say it's rallied because the oil, so the last time oil in March was $81, okay? $80, $75, whatever. It was higher than it is now. And the Canada was actually a lot lower. So again, that's just to show you, Anthony, that the correlations and what affects them are always in flux.
Yep.
That's what makes because sometimes it's when the carry trade and what Judd will refer to as risk on, then it's interest rate differentials driving a lot of the trade. But that changes dramatically too.
It's kind of unfair that both of you guys were in the currency pits, you know? You guys see things differently.
Well,
And when we started, Anthony, you have to realize that the currencies were so wide most of the time.
Yeah.
You were trading other stuff. So you were sitting in the currencies, listening to it or watching the paint dry, and you were trading other things.
And I'll tell you what, I always loved it because when the board of trade when the grain markets would get dormant, a lot of board of trade traders would come over to the IMM and trade. because they knew there was a lot of stuff going on in the currencies. So they would come and being board of trade traders, whenever what we call the paper we're buying, they're used to selling because the whole board of trade mentality was just fake the retail trade. And I would grab these guys who I knew for a long time, and I'd say, don't trade it like that because you don't know who the ultimate liquidity provider is. You're selling into it. But this is a global market in its pure form. And everybody can make money. You as a local can make money, and the retail trade, when the momentum started going, you want to be with them, not fading them. Because the opposite side of the trade was coming from the bank market.
Well, and that's a really good point, Ira, because that's why most guys that came off the floor couldn't make the transition because they were too busy taking the opposite side of the trades instead of going to the capital flow.
Exactly. Exactly. And a lot of the board of trade guys would come over, they'd get the brains beat in because they just couldn't comprehend it. So you raise a very interesting point.
So given that, let me ask you guys this. Where do you think the Swiss can go?
Okay.
Switzerland.
Really, the Swiss was weak all day today.
Yes,
Right?
I'm short the Swiss. That's why I'm asking. So
Okay. It was really weak today.
yeah.
And it's weak. I think it was weak for a reason because the Swiss National Bank released their currency numbers. Oh, I also want to call your attention to something as long as we're talking currencies, all right? Oh, hold on, I'm trying to get this page back. Watch the euro sterling cross, Judd. I'm trying. Hold on one second. I'm having problems with my news feed. Okay, I can't.
All these currencies have come too far. The Swiss came too far. This, you got a double bottom here. And it's coming into the 50 to 200 week moving average. You don't want to chase that unless you get further price action.
Okay, so Anthony, the Swiss National Bank released their currency holdings today.
Mm-hmm.
You know, not long ago, they were up to almost 900 billion. I can't get into my news source for this right now. They're having problems. Engineers are working to resolve it. Okay. So when I get it, so I can't, so it was down to about 735 billion. Even though there were hawkish comments coming from Thomas Jordan.
Right.
I just can't get in there. But I think the recent strength in the Swiss currency, to me, had to do that the SNB was taking off some of their foreign currency positions, which meant that they were buying Swiss to retire the Swiss, so that now they have more room for intervention. And I think that's how the market read it. Because they now have it down by about 150 to 170 billion from its highs, which means they were also selling some stock and some bonds in order to do that, because they had to reverse their position. But that gives them more firepower going forward. So I think the market got a little bit nervous because we've watched the Swiss outperform a lot of currencies, right? God, you want to see a wonderful chart, take a look at the CAD Swiss.
Where is this? I got it somewhere. All right. Ah, shit. Anthony, which chart were you looking at when you were trading the Swiss?
I was doing the futures.
Yeah, I know. Were you looking at the pit too, or just the minis?
The minis.
The pit gives you a totally different look.
Oh, does it?
You should have been out of your shorts.
I paid for it.
Here, look,
Yeah.
this is here. Yeah, this is trying to go, Ira. Here. Let me show you why. Okay. What was that low? 112.03.
Mm-hmm.
Okay, so it went down there to the weekly ORL and came right back up. And guess what?
Right into that.
Right
Yeah.
into that. So there's the pit, right?
Yeah.
And didn't quite get there on the in the minis. So
Mm-hmm.
if you're going to trade them a major in the currencies, always go back and check the pit to see if you're missing anything.
Got it. Okay.
Yeah, because what there's no pit, but would be the 7:20 to 2 o'clock US trading hour.
So here's the issue, right? It's like, and Judd, I mean, you said this many times, and it's not like I don't hear it or write it down. I don't have that goddamn data, Judd. My shit doesn't have that. I'm seeing a totally different picture at this point,
Then
right?
ask me, and I'll
Yeah. No, absolutely. Yeah.
But
Okay,
Yeah.
now take a look at what's going on in the euro sterling. And believe me, everybody hates the sterling.
Oh,
and
God.
it just keeps rallying.
Yeah.
It is, and look at it on the euro sterling. It's gonna, for what is gonna close under the 200-day today.
Here,
Now-
I just had the thing up. What am I doing? I can't see my own board.
Well, Ira, maybe all the investment banks like J.P. Morgan and Goldman and the rest of them that are moving their offices from London to Paris
Yeah.
should probably think again
Well, it's
before the European banks blow up.
It's just right. It's just something interesting here that the currency that now this is a 1-day off move. Let's put up the weekly on
Yeah,
that.
the weekly is coming in a major shit.
Yeah. So
Yeah,
it's
so you got 20 ticks
Absolutely.
left on this move. You have 20 ticks left on the move.
look, yeah, unless something bigger is developing.
Yeah, so you have to get under 86.90 and stay there to believe it.
Well, I keep arguing with even British people that, hey, you're lucky to be out of the euro right now because you're not bearing the responsibility for what can ultimately take place in the European debt markets.
Yeah, well, they're screwed so many other ways.
Yeah, they are, but that's the overhanging responsibility of the European debt markets, especially to Germany, is enormous.
Well, I put 88.90 as a horizontal line on your chart, Ira.
Yeah,
Because if it starts getting through that, which is also like the 50-month,
yeah.
maybe it does get going big time. Because if it does, it'll drop 3-4 figures.
Oh, yeah. Oh, into my favorite areas, down in 81.70 to 82.20, which has great relevance to, of course, the Brexit time. So
Judd, right click and make an alert.
You know what? I'm still waiting for you to come out here and give me a tutorial live.
Stands up for it.
I know, but I've had trouble renting the walker at the airport from.
Hey, Ira.
Oh God.
What?
Quick question: Do you think the BRICS currency could threaten the U.S. dollar at all?
That's what? It's too big a question.
It's too big of a topic.
Posar unleashed that, because as he wrote, it's probably 18 months ago now, the end of the petrodollar.
Mm-hmm.
So now it's spilled over to the concept of the BRICS. There's so many pieces to that. It's one of the things when I go for my walk, Anthony, I think about, and how could you do it? And I've been a believer that if central banks were going to go to a stable currency or a digital currency, and I thought the Chinese would actually do this, they would back it with some real assets like gold, silver, a combination thereof, platinum, maybe some other commodity, maybe lithium, whatever. We're just not there yet. And nobody's going to gravitate to the BRICS. But what's going on, as we've seen since the idiot Navarro when they put the tariffs on China, and the U.S. ag sector really got lambasted as the Chinese retaliated with tariffs and started doing a lot of stuff from Brazil. There is more trade going on within, what is it? The original BRICS acronym. It was what? It was Brazil,
Back up, you guys.
Brazil, Russia, India, China, and South Africa. So there is definitely more trade going on between them.
Mm-hmm.
In fact, there is a really good piece that Adam Tooze put out today that came out of, oh shit, let me see if I still have it. Hold on. I'm getting tired of his bullshit, but that's okay. Everybody's entitled to make a living. Let's see.
I do miss you cussing, Ira. I'll tell you that much.
You miss me coughing?
No, cussing.
Oh, cussing.
Yeah, you were on a good one the other day.
Oh yeah, I know. I had a rant going. Let's see. All right, let's see what I got here from Tooze. Did I get rid of it or did I keep it? Because he cites something very interesting. Hold on, let me see. That's gone. That's gone. That's gone. That's gone. That's gone. Alex. I got rid of it. But he cites the work out of the Center for Economic and Policy Research, which is headed by Dean Baker and my dear friend Mark Weisbrot. And I can say that honestly because we went to grammar school, high school, and college together, and actually lived in the same rooming house next to each other senior year of college. We used to fight like cats and dogs. But they did a big thing. And if you can find it, Adam Tooze cites it about how much of the world is presently under sanctions from the U.S.
How much of the world is actually sanctioned? 70%? 65?
29.2%, I believe. I can't find the art, but I believe.
Wait. Can you say that one more time, Aaron? Sorry.
29% of the global economy is under some type of U.S. sanctions.
Oh, under the sanction. Okay, yeah. That sounds about right.
Yeah, it's so, and you know what? And from the political left, which CEPR is definitely of the political left, they see it as, they hate them because, they think that it harms the average person in these countries way too much in the hope that these people will rise. I mean, that's what the sanctions are built on, is that things will become so miserable that the people will rise up.
Mm-hmm.
So they've always been against it, but it's an interesting look at it because we don't, and I'm, but to me, all sanctions are an act of war. We learned that back in 1939, 1938, 1940, because the Japanese felt so choked by the US sanctions on trade with oil and everything else that their way to respond was, of course, to attack Pearl Harbor. Now, I'm not justifying what they did in any way, shape, or form, but when you do embark upon sanctions, you are committing an act of war, whether there's a body count or not.
Right. Okay, makes sense. Let me ask you this in terms of and if you have to get your step counts in, you let me know. But I heard it interesting because I was talking to some friends of mine who work for an investment bank, in China. And he goes, a lot of Americans are talking about how China is actually trying to take over the global currency by having a certain percentage of oil being transacted in gold, so on and so forth. And his response is China never wants that. As a matter of fact, they just don't want the yuan or the renminbi to be the currency of the of the world, because sorry, go ahead, Byron.
Okay, now it's funny because I just got the report, the human consequences. I just came in as we're talking. I'm gonna post it. This just came from the CEPR directly. I will post it. The human consequences of economic sanctions, and I'm telling you, their bent is to be opposed to sanctions. They've been opposed to sanctions for a long, not even before the Ukrainian situation. They go back a long time with this. So let me post it. Yeah, it's funny.
Hey, somebody did a really good hit job on that idiot that designed him.
Oh, yeah, I'll tell you who did it. Because I agree. Oh, Doomberg.
Yeah, well, yeah, that's where I read it. And somebody else did a video thing on it as well.
Yeah, Doomberg picked up, but I've been on that for a long time. So I actually sent him a note going, yeah, it took you a while to get there. Yeah, he was. Oh man, did he do a job on that? Whew. Don't get on the wrong side of Doomberg.
Yeah, get another degree and then get a job. It's basically what he told me.
I know, and he did take another job right away. So let me go back and I don't believe that.
You don't believe that China does or doesn't?
China's in a situation, and I'm a big fan of Michael Pettis, and I'm going to refer to him and his work. And he teaches in China. He's a professor. He's actually invited me. He says, you got to come and speak to my class. I go, you're paying my ticket? I said, I'm not looking to go to China anyway. So, but Michael Pettis has been on this in answering your question. Pettis has maintained that if China were to transition to a much more domestically based consumption economy, then it's in their interest to strengthen the yuan.
Yep.
Right? I mean, that's because the stronger your currency gets, the cheaper your imports are, and you're importing a lot of goods, the more you're enriching your middle class, which a consumption-based economy, consumption demand-based economy, by definition, infers a large middle class.
Mm-hmm.
Yeah, but they're looking to make all of the stuff themselves, which means that all they need to do is have a decent currency to be able to import the raw materials.
Well, that's all part of the equation too, because it gives them a huge then competitive advantage, they feel, with cheaper labor costs and cheaper import costs, and they're enriching their middle class. And I think we saw that during COVID. Now, retrace a little bit, and one of the greatest charts has been the yen yuan, and it continues stuck in this area. But being stuck in this area will tell you a lot, because it's going to come out of here. I just don't know which way.
Yeah, it's stuck, especially on the weekly.
But it's phenomenal because it's sitting here, and if it comes out above, then I would say China is going to be even more aggressive on its consumption base, because it's allowing its currency to gain ever more, to increase in price against the yen, who they do so much trade with. And I'm not talking about Costco and Walmart type of trade. I'm talking about trade of buying high-end, retooled, engineered machine tools, So I watch that for that reason, Anthony, because that will tell me, just to spew out that concept. Okay, it's an interesting theory, but tell me what their objective is.
It's funny you said that, Ira, because I have friends and family in Vietnam where they were talking about hiring the Chinese or China to build their railroad systems because they're trying to do this subway thing. And north they're like, oh, it's a goddamn roller coaster. And what the Chinese had to do was goes, okay, we're sorry, we'll hire Japanese, and we'll it's all Japanese material, but you have to go through us because they're trying to do that. But it's hilarious you're saying that they're getting a lot of materials from there.
Which is interesting because, you know, I go back and Jen and I reviewed this so many times. I don't know whether you were privy over the years to the discussion, because this goes back to 1998, June of 1998.
Mm-hmm.
Okay, so let me pull up my yen yuan chart.
You talking about okay?
Yeah, so it was really dollar yen. I mean, that was
right.
That was, you know, that yen was at 140. Every single hedge fund at the World Bank Conference was long dollar yen. I'm sitting next to what's his name, John, whatever his name from FX Concept, and I pull out my cycle sheet and ask him what his stock was.
Yeah.
He said there wasn't one. He lost 20 fucking figures the next morning.
Yeah. And so, Anthony, you're in Hong Kong, right?
Yeah.
So June of 1998, Bill Clinton goes to Beijing and Shanghai with a full plane of U.S. business people. This is before they got into the WTO.
Oh, this was the other one. Oh,
Ira, I was in high school.
No,
What?
I was on the phone for this intervention. I was on the phone with AIG out of London, their FX desk.
Hello.
And a minute before,
Yes,
2 minutes before the IMM opened at 7:20.
Working. What's going on with you? I talked to Lawrence. Hold on.
2 minutes before the IMM opened.
Yeah.
Goldman came in and bought 60,000 calls in yen or puts in dollar yen, okay?
Mm-hmm.
Over the counter in London. And then they fucking intervened 2 minutes later. It was just a fucking coincidence. So that's why I have such a high regard for Goldman Trading.
Was it a coincidence?
Come on. Hormats, Clinton, all these guys were really fucking tight. That's when Hormats was CEO.
That's why I said the best trader that I've heard of and or know isn't you, Andrew, Ira, Angelo, none of you guys. Who it is Pelosi.
No, I would say, Anthony, it's Hillary Clinton.
Yeah, Clinton. Yeah, right, Robert?
Ask Rob from Texas.
Yeah.
For the whole cattle thing. Well, that was Dittmer.
Yeah.
That was Dittmer, Robert.
But you're right. Pelosi is right there. She's a genius.
I mean, when he had, I think he owned Iowa Beef Packers then, and he basically told all his customers to buy until I tell you to stop. And the guys that didn't want to buy any more cattle so he could get out, he kicked them off his books.
Futures or?
That's a way to
Oh,
do it.
yeah. Are you fucking kidding me? So some of the trades that Dittmer did, bought, I don't know, 20,000 bond futures at 80. Got out at 104. Cornered the cattle market. Took 100 million in one trade in the copper from a bunch of Arabs. He took the other side of the trade. They'd sued him. He did some really big fucking trades, believe me.
Yeah.
He was long 20,000 S&Ps in the 80s. okay? This was the big S&P when it was $50 a tick, okay? And they find them one tick, find them $250,000.
Who we talking about?
Dittmer.
Oh, all right. So
He had 2,000 futures in an account with his dog's name.
I missed part of that conversation. So I was talking about in June of 1998.
Right. Well, we were talking about Goldman, and I was on the phone with AIG that morning in London.
And so
And Goldman bought $60,000 puts, yen puts, or dollar yen puts within a 2 to 3 minute period before the IMM opened at 7:20. And then they fucking intervened.
yeah,
I couldn't get off $1 million for 10 figures.
let's see something. I gotta rip a bar on this.
And if that guy at AIG couldn't jam an 8 lot down somebody's throat, it wasn't happening.
Yeah, that was what's his name. I know.
That was when Greenberg was still running the firm.
Yeah, Bernard. Well, no, Bernard wasn't the chief economist yet. He was out of London. They never read a damn thing that he said. That's why they went bankrupt. Because they bothered only the customer. So we had a high in dollar yen. Anthony, are you following me?
Yeah, I'm watching.
There it is.
A high in dollar yen that month
Yep.
of
ORL.
146.78.
Mm-hmm.
Now, Bob Rubin, 2 weeks before this intervention takes place, gives a major speech about how the U.S. Treasury, because he was Secretary of Treasury, about all the benefits of a strong dollar. And it was the Bank of Japan didn't intervene at first. It was the U.S. Treasury
Oh,
that
yeah.
ordered the intervention to strengthen the yen, because the Chinese were very upset, because here they were trying to build their business up in Asia, their export business, and the yen. You can see what the yen has done, right? You look at that. Look at the chart. Look at that move up.
And it's, these guys had dinner every fucking night, 4 nights a week. Hormats, Clinton, all of them. My brother was there. He didn't know what the hell they were talking about.
Well, I'll tell you who I talked about this to probably in October or November, because I belong to the Japanese American Society. And the chair of it in Chicago was Adlai Stevenson IV. Very smart guy.
I bet.
Well, he was a lawyer and he represented a lot of Japanese multinationals. So,
but that was one of the greatest. You don't buy 60,000 contracts of anything, and they did it offshore, so they couldn't be accused of front running in the United States.
no, it was just so huge. And then you see it goes back, dollar yen makes another high in October, I believe it was. Is that right?
In August. And then
August. And then they go into a G7 meeting, and the Japanese were told, and so the yen turns out, that trade killed people. And then, of course, we get the Russian thing that blows up. So a lot of things came out of this, but that was an absolute intervention directed by the U.S. at the behest of the Chinese in 1998. Now, the Japanese are no fans of the Clinton, because Bill Clinton didn't even stop in Tokyo on this trip. It was China, 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 and China. And the Japanese felt very slighted. didn't
I
sit well.
just posted something.
Yeah, Griffin's
We call it
dilemma.
we call it Triffin's paradox.
Yes,
But
Yes.
whenever you hear the mantra, you know, King Dollar, Strong Dollar, Robert Rubin, you know, Strong Dollar, study Triffin's dilemma or Triffin's paradox.
yep. And if you talk with Posar, not Posar, well, Posar is a big reader of Triffin, because I've discussed it with him. But of course, Pettis, and again, it's the dichotomy. Is the dollar an exorbitant privilege, as the French have maintained for 60 years? Or, as Pettis says and others, and based on the Triffin dilemma, is it an exorbitant burden? And the question becomes, the answer is never an easy answer, because am I looking through it with economics or am I looking through it with politics? Hence, I'm a economist, because I always
if Americans were frugal and weren't provided so many inducements to pull forward spending and demand,
right.
all right, then you know I would say it's a privilege. No, wait.
Yes.
Yeah, I would say it's a privilege, but because America does nothing but spend money, then that puts everyone else at a disadvantage.
Yeah, and well, you know, the French were always pissed because it gave the Americans too much latitude to run the global system to their rules, and the French hated it.
And you know what? I can't blame the French for thinking that.
Well, you know, again, because the French, as you just saw with Macron, because Macron comes out of that mindset of what's called Gaullism. Charles de Gaulle, he hated it because he believed that the French were the preeminent diplomats in the world and deserved that seat and that place. And Macron has been trying to reestablish it, but the French in 1956 at Suez, when Eisenhower bitch slapped the Brits, the French, and the Israelis who were dragged along, but it was all concocted by the French out of in trying to get support for their sustenance in Algeria. Because if you understand what was taking place historically, the French were losing their North African colonies. It was over. Look at Anthony, you're in Vietnam. Should we go back to Vietnam?
Hong Kong.
No. I mean, I go to Vietnam once in a while. I mean, I visit
You
family.
go to Vietnam. So
once in a while, yeah.
should we go back to the fall of the French Empire and Dien Bien Phu? As a matter of fact, when the euro was being put together, I was invited to a panel discussion because I knew some of the people who were working on it. And I said, you know, I think you should not name it the euro, but you should name it the Dien Bien Phu.
The what? Sorry?
Dien Bien Phu.
It was not well received.
Of course. What?
Not well.
You know, and this whole dollar thing, right? It's a complicated issue. You know, you get the emerging market economies, which historically have been the providers of commodities and raw materials, right? And those producers and those producing EM countries, you know, it was cheaper for them to borrow in dollar-denominated debt than in their own currency.
Yes.
And then there were times along the way, right, Ira, where that would come back and bite them in the butt.
Yep.
So,
sure.
You know, what does the global economy want to use as a medium of exchange? And should there be some central medium of exchange?
Well, it's a great question. Somebody was actually entertaining that. I forgot. There was a criticism about the Fed today. Was that Hugh Henry? No, it wasn't him.
Both of those guys. But they were not the one.
and they were talking about that the U.S. failed to, whose article was that? That the U.S. failed, and I agreed with that, when they let the dollar run up too high because they started raising rates, and they were squeezing global credit. Whose piece was it? Which I thought was very interesting. Very interesting. Okay,
You know,
so
but that what you're saying there, Ira, that speaks to the Fed being clueless.
Guys, they
Not
can't hear me.
understanding
Only you guys can hear me. But
what they do here with monetary policy,
yes.
right?
I'm gonna close it up if you guys don't have any questions. I know this is
What's the
boring.
ramifications
This is
of it?
very technical,
Domestically and internationally.
Can't agree.
kind of
with you.
talking like talking
and that's what they
to
were calling the task force.
numbers
We
of
discussed
some
it, and
financial
that's why they
whatever,
let
right?
the
So
dollar stop lines back
if you guys
down.
have questions or if you guys want to continue to listen
Yeah.
to,
They needed to.
I can leave it on for a bit longer. But if you guys
I've
don't,
been railing
you know,
against this for so long.
if it's
As long
not
as the world
making
is their
sense to you guys or you guys don't care
you
about
have
it,
an
that's cool.
obligation
I'm
to
just
provide
saying
the liquidity when financial
these
conditions
guys
tighten
from
so
Macro Sense
dramatically
are
around the
like
world.
the creme de
In
la
the United
creme.
States,
You
when
get
the
the
dollar last year was up to,
insane
as long as we're going up,
analytical
it's not very
abilities
good.
of Ira, and then you
I'm
have
not
the
putting-
technical like Judd, and then you have someone like
Anthony, my data is up
a
to date.
funder, a
So,
fund. Yeah. Oh shit.
Foreign currency reserves of the Swiss were down in today's report at 732 billion.
Wait, can you say that one more time, Ira?
Their highs. So it's just worth noting that, because again, the statements that came out from SMB Chairman Jordan this morning
Mm-hmm.
were pretty. SMB's Jordan, right? This came out at 4 o'clock Chicago time this morning. SMB's Jordan cannot exclude further tightening of monetary policy. And yet the Swiss currency has been weak all day on a relative basis for sure. So that was, I think, because of the foreign currency reserve, their holdings. But Angela, I can't agree with you more. And it's somebody was out there really criticizing the Fed for failing at that. But
So you're saying that I got lucky with my short in Swiss, is what you're saying.
I'm not saying that.
Well, first of all, it was a good spot, but you have to check your work.
You just gotta lean on our levels. That's all I got, right?
I would never say you're lucky. You know what?
Just lean onto the levels. That's all I gotta say. Is that wrong?
No, but you have to know what you're trading for. So
Yeah,
why did you take it back at that other level? Why were you going to turn a trade into an investment?
True. Good.
And that's what Judd's trying to tell you, is if you're trading the levels, trade the levels.
Yeah, fine.
Hey,
Especially if you see a level like that and you have the level and you just execute off hamster vision to get them on, that's great. You know where you're wrong, but then you better do a little work to see, if it can, what it can turn into.
yeah. I just want to say for all the newer people in here, when they say hamster vision, they mean like a day or two or maybe even 3. So don't get discouraged. It's kind of, sad.
Well, it could be an hour.
It could be an hour. Yes, you're right. So
I mean, it's distance traveled. It's not time in the trade.
level to level.
If you trade levels, it's a phenomenal way to be successful, but trade the levels and don't turn it into something more. The worst trades I ever make is when I'll trade a level and I'll turn it into a longer term trade that ought not to be. And that may mean I stay, and then all of a sudden I've given back 50 or 60% of what was a good trade. And I just said, well, I'm just trading the levels here, and abided by it rather than looking for more.
Is Silcott here?
Yeah, I am. I've been in and out with work, but I'm here.
How are you doing, sir? I was just wondering what you thought about. I think it was Corn. Was it Corn? Corn did a really crazy ORL.
Nice day there.
Yeah, yeah.
I'm oddly enough, I'm still short December, but I'm long July, and it's not a spread. I'm just running the different durations. So, I try and take the longer term trend for the new crops and the shorter term for mid year, and the mid year's now the front month. So I'm playing momentum now.
I didn't get a text from you.
I said it in the room. Well, of course you're in weird hours across the globe, so you probably missed it.
Yeah, sorry for that.
Yeah, I'm sorry.
Yeah,
No.
and Anthony, when you're looking at, look at it on an active daily in the corn. This is a real nice rounding bottom, and it's got back above the short-term momentum lines.
Mm-hmm.
So you really, there's a Wednesday low, came back half year. The perfect retest was in the wheat yesterday.
Yeah,
where it came back. The Chicago wheat came right back to the breakout line, and the Kansas City wheat did, and the Chicago wheat didn't quite miss it by 3 cents. But now this is a pretty good spot up here. Now you're back up to cloud resistance. It's got to get over probably 845 to go again.
Honestly, yeah. Sorry, good.
Anthony, are you still here?
Yeah, I'm here.
Oh, no, Angela.
Oh, Angela.
Yeah, I'm here.
Okay, so now Alex just cleaned up the piece. I just sent it to you.
Yeah, I see that. It's
This is from Pozar today. So he's citing that there's still room to raise rates. There's a very strong industrial policy team where the government is incentivizing the private sector to do reshore investments in a world order that's not so stable anymore, he said, adding that long-term interest rates could get de-anchored to the point, this is critical, the yield curve could bear steepen from current levels. Now, that's antithetical to Hugh Hendry.
Yeah, the incentive that I think they're referring to here is the Inflation Reduction Act.
Yeah, he's citing that, all these things. But now, we haven't talked about this, but there was a major speech given last week at Brookings. You know the speech I'm talking about?
No.
I know it was cited, and I read something about it, but tell me who it was again.
It was Jake Sullivan. Not a fan of Jake Sullivan's, by the way, but he delivered a major address at Brookings. I suggest, especially Ryan, the historian, will love this because it's gotten some response in some higher level circles. This was a very interesting speech, and I guarantee you that Poser read it. I haven't talked to him. I don't know that, but I can tell by what he's writing here. I advise that you take a look at it. I'm not going to go through it, but it's readily accessible. Jake Sullivan's speech at Brookings. Because Jake Sullivan is the head of the Biden National Security Team.
Yeah, he was going through all the foreign policy and all sorts of shit.
Yeah.
I think, Ira, that, and I've said this before, but it's just my opinion, right? That Powell thinks that he's got tools to deal with any instability that arises as a result of his hiking rates to fight inflation. I think that's what he's thinking in his head.
I agree, and that's what Poser said. He says, here's his line: I've never seen a Fed that has been proactive at keeping a crisis from happening as it is now.